I'm Secretary of State Trey Hargett. Today is Thursday, November 19, 2015. For those who may listen to the audio of this teleconference at a later date, today we'll be discussing the third quarter of 2015 outlined in the Tennessee Quarterly Business Economic Indicators Report. The report is published through a partnership of my office and the University of Tennessee Knoxville's Center for Business Economic Research. Joining me today is Dr. William F. Fox, who serves as the Center's director. And the report offers a snapshot of the state's economy based on business data from the Secretary of State's Office and Division of Business Services. And so I'll just begin by making a few brief remarks and turn over to Dr. Fox. As we see, Tennessee's economy continues to grow, and we have seen new entity and annual report filings in our office, which continue to suggest growth in non-farm employment, personal income, and tax revenues. The filings in our office tend to be leading economic indicators. So these things bode well for the state of Tennessee and bode well in comparison to many other states nationally. With that, I will turn it over to Dr. Fox for some additional remarks.
Mr. Secretary, thank you very much. Let me just agree with what the Secretary just said, that the data that we see in the third quarter continue to evidence a very strong economic growth in Tennessee. We've now had 15 quarters in a row where we've had year-over-year increases in the number of new entity filings, and so it's basically 4 years in a row we've had this. This most recent quarter, 5.3% increase in the number of new entity filings, and particularly on LLCs and nonprofit companies. And I think some good news for Tennessee is while there were many of those, over 40%, were in the four largest counties. In fact, the faster growth in Tennessee over this last quarter was outside of the four big ones, suggesting some spreading of the economic growth. And we're also seeing strong increases in the number of annual reports that are filed with the Secretary's office. And so again, all the indicators, really good economic growth. In terms of what we're seeing in the rest of the state, just literally right now, the unemployment rate is also being released for Tennessee. It's 5.6% for October, which continues the decline that started in January of this year, and the rate has fallen or stayed the same every month since January. We're now down over 1% from January, so the unemployment rate continued to fall, reflecting the same kind of information that we're seeing here from the new entity filings. And we saw again in October excellent growth in employment. The household survey from which we get the unemployment rate showing over 3% growth, and the business survey showing the number of people actually working in companies almost 2%. And so again, we're seeing it in the business startup data. We're seeing it in the employment data, and of course also in the tax collection data. And so the indicators are all pointing in a really favorable direction for Tennessee right now.
Thank you, Dr. Fox. If I could, if you're not asking a question, I really appreciate the people who've joined us today. If you're not asking a question, I'm going to ask that you put your phone on mute until you're prepared to ask a question, and certainly we'll make sure that we give plenty of time for those. Any questions about the report?
This is Dave Foster in Chattanooga. Any explanation why you're seeing more growth in rural areas or outside the big metro areas, why that may be occurring?
Sure. Well, I think, Dave, some of that is because as you think about growth in even the urban areas of Tennessee, it's not necessarily taking place in the core county. Think of Hamilton County certainly is getting a lot of the growth in your area, but so are neighboring counties. And so what this is suggesting to some extent is a suburbanization as much as it is a ruralization of the jobs.
All right. Thank you, Dave. Any further questions regarding?
And real quick on the unemployment rate, is 5.6 is what you said. So
yeah, it's 5.6.
Just coming out. So that was the lowest since 2008, I guess, right? I mean, that's a new low.
I have that here in front of me just so that I don't make a mistake in what I'm saying. Looking back quickly, I think that's right, Dave. In February of 2008, we had a rate of 5.6, and and you'd have to go back to 2007 to actually find a lower rate. So the pattern is again a very encouraging one on the job market side as well.
This is Milt Capps. I have a couple of questions. In the report, the rate of dissolutions is, I believe, generally cited in the report as a positive indicator. And I asked a similar question in another one of these calls a few months ago, but we also hear from other people who do rankings of states and things like that it's important to have a lot of businesses, smaller businesses dissolving anyway. In other words, creating that churn that is part of the rankings that some people produce on the states. Obviously, I guess there's good dissolution and bad dissolution, but what do you have to say about churn as a factor in the health of our economy and the confidence we ought to have in this trend that we seem to be seeing?
Well, my response, maybe the Secretary would like to comment as well, is that if every company that could be started would be successful, obviously there's no bad news in that. But the reality is, in order to get a lot of successes, you have to have a lot of tries, some of which work and some of which don't. And so having a lot of entrepreneurship going on in your state economy, I think is really good news in terms of the long-term future of the economy. Some of it won't work. People will try things that just turn out not to be the right thing. But there certainly won't be any wins without trying. And so I do think it's good news, particularly when we recognize that while there's a significant number of dissolutions, it's still much smaller than the number of firms being started. In other words, a bunch of those companies are really working out. Mr. Secretary, I know that you, when you talk with the rating agencies, you at times have talked about this entrepreneurship. I don't know if you want to add something to that.
Well, obviously Tennessee continues to be a state where entrepreneurial activity tends to be higher than a lot of other states, even other AAA rated states out there. And Milt, you asked a great question about the churn and also the number of dissolutions. Now, the number of dissolutions is going to be a little bit higher in this quarter because in August there just tends to be a lot more companies that have their annual report due, and therefore when they don't file their annual report and they're dissolved. Now, what should show up later on is those that get back in good stead who may have just not filed and are still a going concern. So that's something that would kind of show up in later reports as well.
Okay, I have a follow-up on the dissolution. You say that 40% of the formations are in 4 counties. How are the dissolutions concentrated? Are they also weighted toward the 4 counties?
That's not something we have looked at precisely. Larry, I know you're on the phone. Is that something you have separately put out the data on?
I'm sorry, on the counties? Or?
Yeah, the county level for dissolutions.
No, we just have data on the new entity filings, I believe.
Milt, that's a great question. Maybe that's something going forward we need to try and look at. That be another good metric to look at. So, but no, we don't have that. Go ahead.
Yeah, I'll follow up with you guys. I think particularly with regard to urban/rural and what have you, that'd be an interesting number.
Yeah, that's a fair question, a good observation.
We were. This time trying to add the notion of just how fast these 4 counties are doing relative to everybody else, because they are a really big share. And I'll admit to being just a little surprised that the rest of the state grew at a faster rate over this past year than those 4 big counties. And as Dave raised the question about why might that be going on, certainly the suburbanization is a big part of that story, but there may be more. And as we looked in more detail on a county-by-county basis and groups of counties, we may be able to find some additional trends there that are worth asking. So a good question to raise.
Okay. I do have one other question, but I want to let anybody else, I don't want to hog this. Anybody else got one? Well, let me ask this question. In reading these things over the years, I guess I tend to interpret them as representing sort of a top-line indicator of how the economy doing based on very traditional metrics. And I'm wondering, when you describe what confidence you think we can have in this trend continuing, are you factoring in, the availability of capital, the quality of the workforce, all these other things that I know Dr. Fox and others do look at in various contexts, but could we assume that those are somehow sort of reflected in these numbers as well?
They are reflected in the numbers in the following sense of the word. There's not a major econometric model doing this. Instead, what we're doing is analyzing whether or not particularly these new business filings are a leading indicator of the rest of the economy, particularly employment. And so the notion of a leading indicator presumes that in the past, when we've had increases in numbers of filings, what we have is more employment the next quarter and so forth, and that, for that to take place, you have to have the capital investment and the available labor force to do that. And so what it's saying is, historically, as we've analyzed this, it's been true that there has been sufficient capital and labor to allow us to continue to grow into the future.
Dr. Fox, I think this is the sixth report we've done. We started not just collecting this data, but partnering with you to analyze this data, I think about a year and a half ago. And part of that was born out of when we would visit with credit ratings agencies. We talk about the entrepreneurial activity. We talk about that being a leading indicator of an overall economic growth or non-growth, perhaps. And so we just thought we've got this data. We ought to really break it down and analyze it. So I appreciate your talking about that, Milt, how you've been looking at this for a while.
Well, I'm trying to follow the rural and the urban economy, and the Kauffman Foundation, which made another announcement here this week, which promotes entrepreneurism. They pointed out that Nashville, this was in an earlier study, not the announcement they made this week. They pointed out that Nashville was one of the lowest ranked cities for entrepreneurs who start new companies based on innovation insights they have, as opposed to people who are basically just out of work and desperate. And so the quality of entrepreneurship starts to factor in here, and that relates to capital and all the rest of it. So I look forward to following up with all of you about that.
That was the Kauffman report, you said?
Kauffman.
Okay.
Kauffman Foundation out of Kansas City.
Okay.
I can send you the link on that if you like.
That'd be great, Milt, if you would send that on.
Okay.
Very, very interesting information. Thank you for sharing it.
Well, if there are no further questions, we appreciate your participation.
Dr. Fox, if I could just add one more question real quick since you're on the line. Coming into the holiday season, I know this isn't directly germane to this, but you talked about the overall economic signs of growth. As you look at that in the holiday shopping season, as a retail sales tax dependent state, it's obviously something we focus a lot of attention in government as well as on the business side. What's your expectations for what kind of a Christmas shopping season there's going to be in Tennessee?
Sure. Well, consumers are leading the economic recovery generally right now. They're the key to continued growth, and I think that's going to remain true for at least through 2016. And so first of all, we need consumers to be spending at pretty strong pace, and I think that they will. And so you'll see probably 3.5% to 4% nominal growth in sales during the holiday season. Now, if we decompose that, what we're going to see is much faster, double-digit growth in e-commerce and 1% or less in-store sales. And so it's going to play out differently as we go forward. And you mentioned the tax implications, and of course those are important to Tennessee. And we're less able to collect on the e-commerce side than on the bricks and mortar stores. And so we may not do quite as well in tax collections as the holiday. Having said that, sales tax growth in Tennessee has been extraordinary for the last year, including so far this fiscal year, and so it's showing consumers are outspending in Tennessee right now.
Thanks a lot. Really appreciate all the help.
Everybody have a good afternoon. Thank you, Dr. Fox, for your great work. Larry as well.
Good talking to everybody. Bye.
Thank you, Secretary.